What do you think is fueling the market action? Is it just trade that is dominating in every headline from Washington, changing sentiment?
It seems so. I mean, this morning you have headlines from the Secretary Mnuchin. The market gets some short covering, the market spikes up, but there's no follow through. So I think that we lack communication, we lack information. So you're going to see this back and forth for however long it takes for this trade situation to resolve itself. We're going to be in this range. We've been in a range for a couple of months. It's going to continue. Unfortunately for investors, you're probably better off just to ignore it all. Not pay attention to it and just wait for it to be over before you make any portfolio moves at this time.
I've just noticed, Michael, technology is now the worst performing group in the S&P. So that's a real turnaround from what we saw earlier. And people are looking at this group, which is really caught in the crosshairs here of trade. Semi stocks have been hit, chip makers, of course, and even the FANG names recently have proven vulnerable. What does that tell you?
What it tells me is that as we approach quarter end, I think folks are beginning to do some portfolio window dressing. And certainly what we are finding is that they are selling some of their winners ahead of the quarter's end. It also indicates that the stocks have done quite well from a momentum perspective, and they've probably gotten a little bit ahead of themselves as it relates to their prices. So naturally, as we approach quarter end, we see some folks taking some profits, doing some window dressing, and it's put a little downward pressure. Certainly earlier in this week when the discussion was around that the trade conflict was finally going to impact technology, I think that certainly hurt the stocks as well.
Is that a reason to stay out of tech in your view, Jamie? I mean, the fact that this is a group that has been leadership, right? And this is a group that's typically used as the ATM whenever there's a market downdraft.
I don't think there's any reason to get away from tech because of trade. I mean, it's been a leadership group. And quite honestly, it's where the money is. I mean, just about every piece of investment, you say something tech, everything's tech now. I don't think you can really just, separate technology from almost any other industry. So I think it permeates everything that we do. So I think that if you're going away from tech for trade-related reasons, it's the wrong choice. So I think it's very much a trade you should stay with for a while.
Michael, where could I find a winner or two?
So I think the thing that folks should be thinking about is they're loaded up on growth, loaded up on technology, loaded up on momentum. And I think there's a lot of classic signs that we're entering the later stages of this cycle, whether it be higher interest rates, tighter monetary policy, inflationary pressures building, so many things, yield curve flattening. So, Tyler, I think what folks should begin to do is take some profits from the growth momentum area and begin to think about things that benefit from higher rates of inflation, higher input costs, and building inflationary pressures. That's energy, that's materials, that's commodities, and natural resources.
Jamie, how do you read the flattening yield curve? Financials have dipped into the red again. They've been underperforming for weeks now. Looking at this flatter yield curve, is that ominous?
I don't know if it's ominous. I mean, when you have people that are buying treasuries because they're afraid the yield curve will flatten, but it's kind of odd to me that the yield curve is flattening given that the Fed is actually, we're getting ready to hit $40 billion of runoff of the balance sheet. So there's some selling in there. We're going to hit $50 billion in October. So the Fed's balance sheet, you get some natural selling coming monthly from the Fed. So you would think, or I would have thought that maybe that would have had a more negative impact on the yield of the longer dated treasuries, but it's not currently because of fears of what is going to happen with potentially a recession or potentially with trade, running off the rails. But once that's over with, it's probably going to pick back up and the yield curve is going to snap back higher. So if I were, investing in financials, I think it would be a good idea to kind of pick some up right now while they're being sold off. I don't think this is probably as justified. It might be more than just yield curve. It might be housing. There might be a couple of other items that are sort of worrying people about financials at this moment. In addition, Goldman Sachs and Morgan Stanley are sort of the poster children for globalization. So that trade component is in there as well, particularly for those financial institutions. So I think there's more to it than just the yield curve.
For investors who were betting on financials all this year on the notion that the yield curve was going to somehow snap back and become have a steeper curve, they haven't been greeted with much success. Michael, is there why have you avoided? It sounds like you've been avoiding financials. They're not among your top picks, at least. And do you see that changing?
I wouldn't say that we're avoiding financials. I think the thesis continues to be pretty sound in terms of better valuations relative to the market, the fact that as interest rates rise, they should see better profitability, and deregulation should help financials. Melissa, I think as you're saying is that essentially what's happened are folks have kind of been cooled off by financials and the fact that we just can't get that yield curve to steepen. And so from my perspective, as Jamie said, I think as we get later in the year, a couple things are likely to happen. I think the Fed is going to begin to signal that they're getting nearer the end of their tightening cycle as early as 2019, which should have a while longer, but I still think it's a good trade headed into the end of the year in 2019.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.